Good afternoon, everyone. Well, it seems like every day I do one of these videos, it just tends to be an absolutely mad, volatile day, and today, again, was no exception at all. It was pretty insane. It looks like we're having capitulation right now, where everybody's just heading for the hills, going into bonds, selling off stocks, and to make things worse, the life exchange actually went down at about, I'm not exactly sure when, around 2:30, 3 o'clock, and pretty much, was down for about a good 2 hours. So it was a bit of a nightmare for anyone who was stuck in positions while they're in, if they're trading any of those products. I'm just looking, at these charts like we do, and last week, as remember that we were looking at this uptrend over here, and I was pretty much just saying that while we're on this uptrend, pretty much keep on playing it as it bounces up off these levels, and pretty much it would have actually worked out really well if we kept on doing it. I think last week we were around somewhere around here, and it just basically kept on bouncing, little fake breakout, but we kept on bouncing. Another one over here, and pretty much after that, this is this massive move we've had for today. Well, absolutely gigantic on the back of the ECB saying they're going to continue to buy bonds and increase their lending through 6 month, a new 6 month allotment program. So, to be honest, we're just in a lot of trouble, really. To be honest, I reckon this is the start of a double dip, and looking at this Schatz, I actually like it quite a lot, because all these technical points have actually held, formed some sort of basis quite well. So if we look at, there's about 100 points back, after this big move over here, I think that was on the last ECB actually, or the non-farm payroll, should I say, we, came back, bounced off this level. Then that level turned out to be a resistance until we broke it again over here, so the 108.12, and then since then we've just been bouncing along this trend line. Now the top of the previous spike was 108.71, and we sort of formed head and shoulders formation off that level. So the two shoulders bounced off those 108.71s, where the head actually broke beyond it, went to 108.83. But two shoulders actually used that as a level. We came back off to form the full pattern, which you can see over here, and then we pretty much just bounced, and since then we've just been up 60 fat ticks in a line. And looking at this now, if we just look at if we do a Fibonacci retrace on this big move up, I guess if we're looking for pullbacks where to go long, the most obvious points seem to be, this region over here, 108.76.5 to 108.80. This coincides with the 50% Fibonacci level, plus another big level would be at 108.71 that we were just talking about right now, the resistance of the two shoulders plus the previous high from the previous spike. So I think if we do come back anywhere along these lines, I think this could be a good buy around this area, and obviously look for the high risk to reward strategy, so stop out if it goes anywhere underneath here. But that would be my plan of attack anyway. So yeah, that's the Schatz. And if I look at the Bund, similar sort of picture as you would expect, but it hasn't been as perfect in terms of the levels and how everything has bounced off of it, but the general trend is still there. With the Bund, we've just had this same type of upward trend like the Schatz, kept on going up as we discussed last week. So if we just carried on buying along that trend line, it would have worked out okay. And then this is just the last couple of days where we just had this big fat rally, and we traded as high as 133. I think, as far as I can remember, back in I actually can't remember what it was, but I think the highs of the Bund was 134, 135, and then from there we pretty much just dropped 700-800 ticks. So, well, I don't see that. Now we're having actual proper contagion troubles, especially with the US as well. I don't know if we're going to have that anytime soon, but it's at pretty lofty levels around here, and looking at this over here, like levels where I'm looking to maybe go with it again, is if it reaches the trend line, so 132.09, that's like a 60 ticks down from where we are now, or 131.93, which is the head and shoulders level over here, and then a point at the previous spike, 130.90, but that's a good 150 points away. But to be honest, that seems a bit far away, but the way we've been moving recently, like, I wouldn't be surprised if we see it on Monday or tomorrow with a good non-farm. I can see the Bund right back down there, but we've actually rallied a good 650 ticks from this point over here, from the start of the trend. It's pretty phenomenal, really. And so that's the look at the bond. So realistically, it would be hard to keep on picking tops right now. I think the safest strategy is to try to go with the flow, trade what you see, not what you think, and the trend is upwards, so any good pullbacks, that's where I'll be looking to go long, unless something tells me otherwise. And just want to have a quick look at this, just to show you the stocks which have been pretty lethal. This is the Eurostoxx 50, and since last week we have pretty much come off 10% in a week. Like, that's gigantic. Anyone holding stocks, it's not been pretty, and I've been one of them. Luckily my portfolio is quite light right now, but it's just very, very, very difficult to pick anything right now, because the overall trend is so bearish, to be honest, and it's hard to go short as well, because we've come off this much, and then you think over here, the general way the market is, alright, maybe this might be a good place to go long, and you'd be a bit wary to go short, but then before you know it, we've dropped over here, and now is it a good level to go short here? I don't know, risk to reward ain't there, to be honest. And this last move, basically from the beginning of this week, we have dropped a good 135% from the beginning of this week, which has been ludicrous. I mean, if we go to a 5-minute chart of this, we can just see it here. It dropped since Monday, and looking at this, if we just do a fibra retracement from the start of the move, and we can see over here, I guess the first level of resistance to the upside, really, if we look at 38.2, 50%, which would be 24.61 or 24.42. So it's a bit dodgy, and this is why I don't really like the stocks that much. Just a bit too crazy, really. And just a quick look at that Ftse from where we were looking at last week. This is the levels that we had last week, and this is where we were actually trading last week. And since then, we said this 57.62 was the sort of support and that we had, and since then we broke over here on Monday. It tested it, but basically it just got slapped down by all the sellers over here, and since then it's just had a good 400 tick move lower. Been a bit, and it's still in a mega downtrend right now, so no reason to buy it until there's any sort of, I guess if we go back, let's just see where these levels are. Right, there was a level over here, if we go to the daily chart, at 54.70, but again, that just got blown away. If we go to the weekly chart, right, so this is the move we have. I guess the next sort of support we have is maybe around here, 51.25. So I mean, well, I guess 52.87 as well. So I mean, still quite a way down we can go for this Ftse as well. In terms of the spread, what I've been trading, it's just been very, 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 very tough. I mean, to be honest, in hindsight, I was a bit stupid, and as soon as they start saying the bond program, it should have occurred to me that we would be going up in the front months as people be buying front month Euribors. This is a bit more safer and this and that, but as I tend to do, I just basically shorted everything, and then I just ended up doing a whole bunch of roundies, just trying to get out of everything. And if we look at the ranges of these things, like, I mean, even June 13, Sep 13, this morning was trading 12.5s, and we've been up as high as 15s, and you know, this was trading at 5.5 before the conference, and it went up to 8 to the 2.5 tick move, and I pretty much was trying to just short everything. And you know, at the end of the day, just, you know, looking back at, you know, what have I done today? 329 round trips, and just a whole load of just managed to just break even after round trips today. Just one of those days where just didn't quite hit it today, just not at all. And if you look at it, all the front month contracts which I was shorting, this is where I lost all the money, 812 euros in Sep 12. But luckily, the back months is what saved me, as always, and pretty much just kept me up for the day. And so tomorrow's going to be definitely a very, very interesting day, and with non-farm payrolls, and it is, with the US economy, with all the bad data coming out, you know, the market's desperately needing some good data. And if we have a bad number, especially a very bad number, a sub, you know, 50k worse than expected plus, I think we could be in free fall, because I think that's pretty much confirming that we're in terrible shape. And I don't want to. It'll be very interesting, and let's put it this way: tomorrow's going to be very volatile. So hopefully there'll be some good opportunities. Let's see how it goes. But good luck for tomorrow.